Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Tess Gruenstein, Senior Vice President of Acquisitions and Portfolio Management at Bailard, a $5 billion investment manager, recently launching the Bailard Multifamily Fund. Tess, it's great to have you with us. Welcome to Trade Talks.
Thank you so much for having me, Jill. Pleasure to be here.
You got it. And let's talk about real estate. How can it serve as a hedge to inflation?
Yeah, I mean, the most classic way that real estate serves as a hedge to inflation is really by the duration of its leases. So, for example, a multifamily building has leases that expire once every 12 months. So really, in effect, every 12 months, you're getting an ability to get another bite at that rent apple. Office, industrial, retail have similar lease structures, but much longer lease duration. So it takes a little bit more time. That's why we really favor multifamily in periods of inflation like this, because you're getting really rapid change in that income stream, which is really key when you see high inflation.
Let's learn more about the multifamily market. Explain to the audience what that classification is, why demand is outpacing supply, and how construction costs are affecting pricing.
Yeah, absolutely. Multifamily in the real estate investment world would be really anything that's over 100 units, let's call it, or maybe 50 to 100 units would be kind of in that institutional real estate investment class for multifamily. So that means large buildings. We're serving a population of people who need to rent or people who choose to rent. So they're paying short-term leases in order to maybe be functionally where they want to be close to the office, or because they need to be close to a grandchild or whatever. It gives you that kind of flexibility that people are looking for. In a high construction cost environment, we're looking to. I'm sorry, Jill. Can you repeat that question?
Oh, and then if you could just follow up on how high construction costs are affecting pricing.
Absolutely. So high construction costs are affecting housing in two ways. One is really in the single family market. So building new housing is costing more money, which is also kind of dovetailing into a period where we have high mortgage rates. So it's really single family home purchasing is going to take even be more expensive. On the multifamily side, we see it's the rising cost of development, which is impactful, but more importantly, we're able to offset that with increases to rent to kind of offset the construction impacts.
What's the mission for the new fund, and how does it fit in an investor portfolio?
Yeah, we've seen in the last 10 years, we've seen a huge swath of new apartments developed and delivered into central business district areas, really high cost luxury apartments, which serve as a specific slice of the renter pool. Where we see a lot of demand and need is really in the less urban environments, close to city centers, but closer to schools, and potentially people who are looking for slightly more affordable rates need to be out of that central business district area. So we're looking at undersupply broadly in multifamily in all asset classes, but specifically in that more affordable, attainable area of the market, where we're really serving renters by necessity as relative to renters by choice. Housing is a solution to this problem. We need to be really increasing the amount of supply that we have in those locations. And part of that is because of COVID, where we've seen really a dislocation in the market, people wanting to be in different locations than maybe they traditionally have been. They don't need to be as close to the office, so they're willing to rent in a place like Florida or a place like Atlanta to get closer to better weather. And there's not as much housing supply to serve them. Traditionally, they've needed to be in a place like a Milwaukee or a downtown Chicago. So this new fund is really intended to serve that slice of the market. Let's look at where COVID has really reinvigorated the market demand in places like in the Southeast, or in maybe secondary and tertiary cities like a Greenville, South Carolina, or a Tucson, Arizona. Let's make sure we're delivering housing to those correct areas, and then make sure that we're targeting affordable, but also luxury. So high quality countertops, high quality construction, but not so expensive that it's going to push people who really need to be able to rent, not to be able to rent that type of product.
All right. Appreciate the insight, Tess. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks so much, Jill. Appreciate it.